So with an influx of bad news in the semiconductor sector ranging from supply gluts to rising tensions between US and China to the retrenchment exercises by the huge semiconductor players, can we still invest in the semiconductor sector in 2023? So in today's video, I'll be doing a deep dive on the semiconductor sector and try to identify the challenges as well as opportunities that still exist within the sector. In order to identify the opportunities, we must first look at the business cycle of the semiconductor industry. So what I have here is the revenue of the semiconductor industry going back all the way to 2011. So we can see that in this 11-year period, there were two major declines in the semiconductor industry occurring in 2013 and 2019, where the revenue of the entire industry dropped by 9% and 7% respectively. But in both cases, the industry recovered the next year and recorded a 16% growth year on year. So in the most recent boom, which was during the COVID-19 pandemic, there is a huge surge in personal computers, and the semiconductor industry received a lot of attention because of this. End markets, which are consumer-facing, are hungry for more chips as they fear insufficient supplies to meet the growing demand. Business was booming for chip fabricators, and they were very eager to invest in new production capabilities because of this. Fast forward to 2023, the same fabricators are facing oversupply issues due to overproduction, and the price of chips are dropping due to the oversupply. The same chip fabricators now have no choice but to cut their expansion plan, and some of them even have to lay off workers in order to tide through this huge downturn. So why am I telling you this? Given that there is a historical trend where there is a huge growth following a downturn, the semiconductor industry can be poised for a huge recovery in 2024. With some say that it could be the new golden age for the semiconductor industry, and revenue will expect to hit $1 trillion in the next decade. So, where are the opportunities within the semiconductor sector if the industry is expected to grow and recover in 2024? Let me now take you through the semiconductor value chain to explain how I identify some of these opportunities in the industry. So firstly, we have the raw materials processing companies, and the raw material for most semiconductor products is silicon dioxide, and silicon dioxide are turned into silicon ingots and then sliced into wafers. Some of these wafers are further processed based on the fabricator specifications. Companies that are in this area of the value chain include Siltronics and Hemlock. And next would be the fabless designers, where some of the big names are at. So the big names that you probably have heard of would include AMD, Nvidia, or Intel. And there is a lot of hype and attention in the semiconductor industry because of these designers. And most of these designers are fabless, meaning to say that they will work with foundries to fabricate their design, with the exception of Intel. Even though Intel has most of their fabrication outsourced, they are trying to build their own fabricating capabilities. So next up in the semiconductor value chain is the semiconductor machinery companies. So they supply the equipment to front-end fabrication fabs and foundries. So the companies within this area would include Applied Materials, ASML, KLA, Tokyo Electronic, and Lam Research. This is a sub-niche within the semiconductor industry that is often overlooked, but they do have a very high profit margin. So next up in the semiconductor value chain are the front-end fabrication plants. And these plants are split into the leading tech nodes as well as the mature tech nodes. For the leading tech nodes, there are actually only three players, being TSMC, Samsung, and Intel. Intel is still spending a lot of money to build their manufacturing capabilities, so effectively there are only TSMC and Samsung. As for the mature tech nodes, there are a lot more players, including GlobalFoundries, UMC, and ST Microelectronics. And all these companies fulfill a different niche within the semiconductor sector. This is also where the silicon wafer and semiconductor machinery companies send their product to. Fabless designers will also work with these companies to manufacture their design. So the remaining steps on the value chain are what we call back-end processes. So the back-end assembly are either done in-house or outsourced to an outsourced assembly and testing company, or what we call OSAT. The assembly are usually done in China when they are packaged into capsules or bare die and connected with connectors so that they can go into a printed circuit board. And finally, the finished products are sold to electronic manufacturers and incorporated to electronic products before selling to consumers like you and I. Knowing all that we know about the semiconductor cycle and the value chain, it's time to review the opportunities that I've identified within the semiconductor sector. So they fall into two main categories. Firstly will be the wafer fab equipment, and next will be companies with a clear technology leadership. So onto the wafer fab equipment manufacturers, the semiconductor front-end manufacturing is separated into many steps such as etching, photolithography, metrology, chemical vapor deposition, physical vapor deposition, etch, chemical molecular polishing, implant, and metrology. I hope you can see that there are many steps involved in the semiconductor manufacturing process. And equipment manufacturing have several niches, and along with it comes some very interesting opportunities. So firstly, we have Applied Materials, and they are one of the biggest companies in the wafer fab equipment manufacturing space, and they have a clear monopoly status on some of the equipments used in certain processes, such as physical vapor deposition, implant, and chemical mechanical polishing. So in the photolithography equipment space, ASML has a complete monopoly over extreme ultraviolet or EUV lithography equipment. EUV is pretty much a compulsory step if you want to manufacture leading-edge chips. Companies in this space, they don't have any choice but to buy equipment from ASML if they want to manufacture advanced chips. Next, we have Tokyo Electron that dominates in the clean sub-niche, and KLA whose expertise are in quality control equipment. Now, typically these companies are not the highest growth companies, but they have a high profit margin due to the stronghold they have over their respective sub-niches. And I will release a separate video to talk about these companies in detail. The next area where there could be opportunities are companies with clear technology leadership in a new market or increasing market shares in an existing market by eating up market shares of their competitors and hence have a huge lead over their competition. For example, in the CPU market, there is either AMD or Intel, and what I have here is the market share of AMD versus Intel. It's been quite clear that AMD has been eating away at Intel's market share and have gained a huge lead over Intel over time. And in the foundry space, there is TSMC, who are able to provide the 3nm tech node, currently the most advanced tech node at the highest yield compared to competition like Samsung and Intel. As for integrated device manufacturers or IDM, there are players such as Texas Instruments, Micron, or STMicroelectronics that are able to fill certain sub-niches in the industry with very little competition. Overall, these are the two areas in which I've identified opportunities for us to buy and hold semiconductor stocks for the long term. And I will be releasing separate videos to talk about these companies in detail. Thank you for staying all the way to the end of the video, and I hope to see you in the next one. Goodbye!